Good morning, good afternoon, and good night. Welcome to another Bootcamp video. Today we're going to go ahead and discuss how to read news. How to read news data, pretty much. Before we get into that, I want to welcome you guys to the Discord. This is what the Discord pretty much looks like. Gotta bring it up on my end. Make sure you guys still have it. Beautiful. This is what the Discord looks like. Everything that I've been talking about, everything that I discuss, all my thoughts, all my notes, everything, even down to discounts when it comes to your prop firms. Everything is here. We have the news, we have welcome and rules in here. We also have the mastermind trading class that everybody is able to go ahead and attend, but it's only for limited people. Only for the 5 people that I deem worthy to be within that class. Moving on, we have general chat where you and people can just chat it up about your trades, your life, anything that you want. Try to keep it trading based and motivational, if anything. We also I have a pretty much structured way of being able to give yourself a reason to journal, right? So this is how you would be pretty much breaking down your trades from daily bias all the way down to the post-trade review. What I mean by that is the daily bias is going to go ahead and consist of what you think the market is going to do, what you thought, what you were thinking that made you come up with that theory, and on top of that, you're going to go ahead and tag along with the trade that you went ahead and took. So starting with the 4-hour time frame, I saw price close above the 4-hour high on ES and NQ. That was a point of opportunity bucket for a price to have the potential to go up. We needed to go see confluences to the upside, showing price wanted to go further up on a small time frame. From there on out, the market gave me an SMT on a bull and a breaker structure on both indexes, proving orders were filled to the upside and wanted to go lower. NASDAQ was long, ES was short. That's pretty much how you would go ahead and, at least that's how I would like you to go ahead and structure out your daily bias. You're going to go ahead and start with the higher time frames. You're then going to go see what those higher time frames did on both of the indexes. After that, you're going to go ahead and give a reason to why you think what you think the market was going to do. So me personally, I seen that the 4-hour time frame was going to close above on ES, and then that right there showed me that price wanted to go up unless price wanted to show me closures or confluences at the downside. And after that, I went in and said that there were also closures at the downside to be had, and after that, I also went ahead and described what I thought was going to happen next. And NQ was long, ES was short, and if we go back into the trade, what day was this? 13th. See exactly what I was referring to. So, I mean, if you really just need to go ahead and have like a backlog, and this is exactly why I have this, just in case you do say, oh, well, that didn't go ahead and make sense. Well, you can go ahead and back into your trade review or anybody else's trade review and see exactly what they went ahead and did. Because it's easy to go ahead and say, oh yeah, I did this, that, and the third, but where is your proof? Where is your proof? And when you show proof, you're needing to go ahead and not only show your entries and this, that, and the third, but they need to also prove that they are there. See this? That's proof that a trade was taken. Proof that trades were taken. I don't give a fuck. Like, if your trade didn't play out, your trade didn't play out. It is what it is. But at the end of the day, there's proof to be had. So there's also pre-market breakdowns, and like a bigger thought process to what you think price is going to go ahead and do for the day. And then after your trades are done, I would like you guys to go ahead and post them into the trade review. Give us like a full breakdown from what you did in your daily bias down for your pre-market breakdowns, and then you're just going to pretty much combine the two into one big large format of a thought. And after that, you're going to go ahead and post, like I said before, your trades into the Discord, so that way people could then hold yourself. You could also hold yourself accountable, and on top of that, other people could also hold you accountable, because once more, it's very easy for people to just say, I did that, this, and the third. But where's your proof to back it up? I could say right now that I went ahead and passed both of those funded accounts that I had just gotten, and I'm waiting for a payout. I did it, woo! But where's the proof? And to the people that are thinking or asking if I did pass my fundeds, not yet. We're taking this slow and steady. But nonetheless, this is pretty much what you'll be getting. Now, I do have an education portion. The education portion is pretty much a whole breakdown of what the confluences are. So, like, if you wanted to go ahead and take notes, these are where they're at. These are all your notes that you could go ahead and take down that I have personally given to you. So that way you guys don't have to go about looking for all this shit yourselves when it comes to the videos. You have something to go off of every single time. A bit better understanding to why things are happening. Right? These are literally all the rules. Then it goes straight into the confluences, to risk management, to like, even look, it even goes for how to go ahead. This is the risk management model that I was referring to. Like I said, it goes down into risk management, to how much you should be technically risking. This is what I would usually risk on a day-to-day basis, and this is how I would format it. Like, this, very simple, very easy. This is all from ChatGPT. I'm not gonna lie, I didn't just sit here and post all this shit. No, I put everything down for what I use for my model, and I just plastered it. This is literally everything that I learned from Tyler is here. This is it, just in a very simpler form. So it goes from risk management to model to even the execution checklist that you should be having. Everything is here for you guys. Everything. Oh, here's your risk management that I was talking about in fine depth. Everything. After that, you have your Q&As. You have your back testing journals, where you can go ahead and put your journals and shit in. This is just meeting plans where we're going to have everything. But again, you get the concept. Everything is here for you guys. I put down everything daily, so that way you guys don't necessarily have to worry about anything. Like, if you have questions, your questions are answered. So, on to the task at hand. Hello. Welcome. Now, if you guys want to go ahead and join the Discord, just comment Bootcamp down below and go ahead and get something rolling for you guys. Once more, the Discord is only meant for serious people, so there's going to be a qualification course that you guys got to go through, and if you guys don't qualify, then, well, see ya. Why is that? Because I don't want to go ahead and be worrying about different people that don't need to be in the Discord. I want serious people. How to read news data. What is news data? News, more or less, is news. What happens in the economic world. And it's very, very vital that we understand not only what happens on the charts, but what happens economically. Because, to be fair with you guys, a lot of people might not want to hear this, but you need to go ahead and have technical analysis with the fundamental analysis. Fundamentals are news. Technical analysis is your reading charts, learning how to read them, learning order flow, this, that, and the third. You need both together. Why? Because let me just stop there and let me just state this. You don't necessarily need to go ahead and like be fully into what the news is. You don't need to go ahead and be watching the news when you trade. Some people do. Some people are like that. Me, my fundamentals end where I read this. Right? So like I open my this is called Forex Factory. Forex Factory is nothing but a big ass engine for your news, or whatever index that you use. Me personally, I use USD indexes, which would be the NASDAQ and the S&P. Nothing more, nothing less. Again, this is where it stops. I read this, I understand what this is, and I know to stay away, either stay away from this time frame to take a trade, or a little bit after, or wait to take a trade after 1 o'clock, more or less 1:30. I'll get into why later. It is very important for you guys to understand that it is imperative that you guys have technical analysis and fundamental analysis both together. Why? Because the fundamentals would usually go ahead and have the technical analysis play out quite well in your favor if you understand what's happening. I'm going to use today as an example. I believe Trump was speaking sometime, but it doesn't show that Trump was speaking. Trump was speaking today, and everything was pretty solid. Let's go. Here. Let's do this really quick. Let me show you. Everything was looking really good. We had a very strong open. Very strong open that went ahead and took out highs here. Highs here. We tried to take out this high, but nonetheless, this high, this high, this high, and these highs in between were taken. Now, the high time frame liquidity itself wasn't taken, but nonetheless, every other liquidity to the downside in that little structure was taken. The point being is, we were looking very good for the upsell. We were looking very good for the upside period. Why? Because we had already closed above the 4-hour mark right here. Now, that's not much of enough, but to go further deeper into this, we could go ahead and see at the time, we were respecting this fair value gap. What do we know about fair value gaps? Fair value gaps are just retracement tools that price could use to go ahead. Fair value gaps are retracement tools that we can use to go ahead and determine where price has the likelihood of going back into or away from. At the time, we could see that the gap was here. This candle printed, but we were further up. This candle wasn't further down at the time. We were actually further up, moving away. That didn't matter. That did not matter all that much. Why? For one reason. And several reasons. Not just one reason. Several reasons. One of the biggest reasons why price might not have enough buying power to the upside is because we have already blew through several session highs. Right? So as I said in my market breakdown, okay, now that we have the understanding that that has happened, we now have the likelihood of price coming back down and disrespecting this fair value gap. But there was a bigger chance for price to come back down and disrespect the fair value gap. Why? Because if we go into the hourly time frame, and if we do a AMD, if you don't know what AMD is AMD is a accumulation, manipulation, and distribution stages that the market has to go through in order for it to move. If you don't know what that is, go back into the first video that I ever posted on YouTube where it shows and explains what AMD is in further detail. The way that I'm going to be using AMD 9 times out of 10 is I'm looking at what London did to Asia. So, for example, for today, I'm going to use today as a prime example. London did not go ahead and manipulate the highs. London did not go ahead and manipulate the lows. That was on ES. If you go to NASDAQ, we can see that very same thing. Did NASDAQ manipulate Asia's highs? No. How about the lows? Did London manipulate the low? No. That right there is going to go ahead and tell me that what we're going to go ahead and do when market opens for New York is one thing. Or two things at this point. Two things. Market is going to go ahead and manipulate the highs to then go ahead and give us a reversal. But with that information being said and done, we don't necessarily know how big the reversal is going to be or the manipulation stage at the beginning. But what we do need to understand is, once more, that AMD is going to go ahead and play out. Fed manipulated the highs, started the reversal. Now what we're doing is trying to go ahead and complete the reversal, but we need more stuff to play out for that, and it's really not going to happen. Why? Because price really wants these highs. It might not happen this session, but it will happen. Nonetheless, moving on. Back to, I think that that covers what I was talking about. I hope so. I just kind of lost my train of thought. But back to fundamentals. Way to go ahead and read fundamentals, period. I'm going to break down each folder so that way we can go ahead and have a better understanding. We have yellow folders that don't really mean much of anything. We have orange folders that are like, we got to pay attention, but it doesn't really matter too much. Just got to watch it. And then we got the big daddies of folders. We got red folders. Red folders are high impact news that will either help market go up or down. It will not change the trajectory of where it goes, but it will fuel price either to the upside or to the downside, depending on which way it's going. I was getting to that. We can see here, back to my point I was making, that we were making a very strong bullish uptrend until Trump went ahead and did his speech. After that, we started to go down. Now, I'm not a betting man, but I would like to say this was at 11. What time did you speak? 4, 3, 2, 1. 12, 11. So I would like to say when he started to speak, price started to go ahead and give us that reversal. But again, we wanted the upside, but whatever he was saying was having people scared and started to sell. See that with this, but we're starting to gain momentum back up. Plus, you can see within that conversation that he was giving to the state, we can see that it reflected what it wanted to do. He gave a speech, and around that time, market was going down, started to go down. He started to give his speech, and his speech helped fuel market to the downside. After his speech, market recovered, but it's slowly recovering. That's the way that I like to look at it. You don't have to look at it that way, but that's how I like to look at it. After he spoke, market is slowly trying to recover back up to the upside. Will it happen? I'm not a fortune teller, so I don't know. But all I can tell you is what high impact news has the possibility of doing. whenever you see red folders, that is a very good time for new people, new beginners, to stay away from the market. Why? Because market has the potential to go ahead, do some fun stuff throughout that time frame. Market has the opportunity to do some fun stuff throughout that time frame. It would either consolidate, put you into a very nasty seek and destroy environment. It will either give you fuel to the upside, or if you're caught in a 15-minute downtrend for a second, or a down candle for a second, it's going to feel that candle, or it's going to feel whatever higher time frame candle there at that time. If you have an up candle, cool. You're depending on what the news is. Depending on what the news is going to go ahead and reflect in the market. But nonetheless, the point being is, when you see red folder news, as a beginner, your only job is to stay away and stop trading. Not even stop trading, but don't take a trade at the exact time that the news comes out. Me personally, I like to either wait for the beginning. Like when I first started trading, I like to wait after the news was done. So say if I wanted to trade at 9:30, nothing here, or let's say this is 9:30, and I seen three red candle, or three folders that are red. What I'm trying to do is not take a trade at 1 o'clock, right? Because we have all these red folders. What I want to do, if let's just say like this was never here, let's pretend this is a yellow folder. We have just these red folders. What I'm doing at 1 o'clock is not taking the trade, but I'm waiting until 10:10 to then wait for the opportunity to show to then take the trade. Why? Because after that certain time frame is done, the data for this, whatever the speech was, is going to come out. That will help fuel the market in a more like gentle way. You won't necessarily. The chances of you being in more of a seek and destroy environment, or say a fucky situation that you don't want to be in, would be less if you would just wait. Now, the people that are like new, not the people that have a little bit of experience underneath their belts, will tell you that it's kind of fun to trade news. It's a little fun sometimes. But nonetheless, this is for the new traders. You new traders are not supposed to be going ahead and trading this shit. Stay away from red folders. It's more. Yellow folders are nothing. They mean nothing. Orange folders, caution. Red folders are high impact. So whenever you guys go ahead and hear me say there's high impact news today, just know there's red folders to be had in the market. Right? That's literally all I wanted to go over today. It's very simple topics that I gotta touch on. Very quick topics that I gotta touch on, but nonetheless topics that I gotta touch on. Why? Because this information is vital. Now, there are people out there that don't necessarily worry about news and just trade off of technical analysis being just what they see on the chart. But to better understand order flow, it is imperative for you to go ahead and combine the knowledge of technical analysis and fundamental analysis, because with both you're able to then add 5 more points into the probability bucket for yourself. Because again, if you could understand that you have 5 high impact folders that's going to stretch from 1 to 130 and possibly 3 if this actually was red, then you would understand throughout that time price is going to have the likelihood of being in a very dangerous situation, or just fuck you altogether, or play out in your favor. There's a lot of things that could happen, but you would want to have technical analysis and fundamental analysis work in your favor, so that way you're not stuck like I have been. Like today was nothing. Today was nothing, was it? What's today? Tuesday? Yeah. Today was nothing. Tomorrow, though. Tomorrow is going to be some shit. We have FOMC press. We have the statement. Federal fund rate. We got a lot of fun stuff. But this is at 1 o'clock. I don't even know if we're going to be trading tomorrow, to be honest, if news is going to be looking like this. Why? Because all the other high impact news happens after 1 o'clock. Price has the potential to go ahead and do some fun stuff throughout this time frame. Maybe even after that time frame. Why? Because it's going to go ahead and build up for all this. It's going to build up for all this as price needs fuel. It's going to get it going at this time frame, and maybe a little bit before one is going to set up fuel, set up a gas station for price to stop at, for then 1 o'clock to happen, or 1:30 to happen, I should say, for then the price to stop out for that gas station and then go, possibly, or break down after it left. What I mean by breaking down, I meant like consolidation. It goes nowhere. So it is very imperative that you guys understand this. Very simple topic, but very imperative. I hope that you guys understand exactly what I was referring to. I hope that you guys understand this. Tomorrow we're going to go ahead and discuss. I think tomorrow we're going to put everything together. No, I'll go over Fibonacci. I'll go over Fibonacci tomorrow. Although I don't use the Fibonacci level all that much, it's also good to have. It's another retracement tool that you're able to use. But it's not, the hit rate on that isn't very good. I'm just gonna keep it a buck. The hit rate on my Fibonacci level when I use it is not very good. But I do keep it on the back of my coattail, so that way if I do need it, it's there. After the fib, after the 79 extension, we could go ahead and put everything together. After we go ahead and put everything together, I could go ahead and do a daily bias video. After the daily bias, we could go ahead and just put everything together. Now we'll talk about risk management. Risk management. After risk management, we'll go ahead and do strategy, trading plan. We'll go over trading plans and how to formulate them, and why trading plans are very vital for you to have. Because if you don't necessarily have a trading plan, then that means you are just not really trading with the best structure that you should. Me personally, my trading plan consists of only taking 1 to 3 trades a day, and the amount of trades that I can take, it depends on how much money I risk. So say, and this moves on to the next point of the trading plan. The risk that I take is just about $250. It's sometimes over that to 300, but I like to keep it at 250. Why? Because it prevents me from going deeper into the hole. That's it. $250. If you're risking $250, you can do some damage. You can do some damage with that. No lie. You don't need to go ahead and go big to go home, or you don't need to go big or go home. You can settle on small moves to be had, but your job is to trade for another day. And if you don't have a way to trade for another day because you went ahead and over risked, or you had a bad mental day and you let that shit slip, and now you just blew your funded, well fuck, now you don't have another day. But for the people that don't do that right now, it's very imperative that you understand how much money you're risking on top of how many days you're going to be trading, or how many times a day you're going to be trading. After, and risk management, so like Oh, the risk management's $250. If I go over that with one trade, no more trades. If I could go ahead and split those, say like 3 trades into 250, golden. If I win 3 trades and don't lose anything, we're still done. Why? Because we won 3. If I win 2, lose 1, we're done. Why? Because I still won. We're still traded 3 times. If I need to keep it very short and light like I did today and yesterday, then 1 trade for $100 would be that all that I would want to lose. Although yesterday we lost a little bit more money, but that's a whole other conversation. And the only reason why I lost more money is because I already had the profit that I made on Friday pretty much, like, I already spent that in my mind. 150 is not what I would like to make for a first take profit on a demo account. Not a demo, a funded account. I would like to go ahead and take about an $800 profit for the first trade. Why? Because it then gives me wiggle room to go ahead and mess around with the consistency, and it gives me more money to trade with throughout that time, versus me only making $170, $140 for the first trade, and then after that having to only risk about $40. Or 40 to $50? Am I able to go ahead and make some good money off of that? Yes, but it's going to take me like 2 times longer to complete my evals if I do that, versus going in for the 250 or the 150 or the $100 to be able to then not only increase the compound rate, but pass this shit faster. So hopefully that was very invigorating for you guys. I'm a little tired, but that's okay. I love you guys. Keep rocking on if you guys are watching these videos. I appreciate the guys. I appreciate the video. I appreciate the people that do stop by these videos and watch them for however long they are. You're the GOAT. You are actually going to make it somewhere. Why? Because you're putting in the work that nobody else is willing to do. At the end of the day, this shit also compounds. Your knowledge also compounds. Right? Keep it up. Now's my time to go ahead and cook dinner so that way I have something for later. Love you. Say yes. Bye.